Welcome back. Well, let's get further fundamental analysis going on all the stocks that we discussed. Amnish Aggarwal, the Director, Institutional Research at Prabhudas Lilladher, joins us on the show. Hi, Amnish. Thanks a lot for joining in. I believe that y'all at PL are doing a lot of calls with a lot of investors, your clients as well. And I think in that call, y'all highlighted a few positives that could flow in with regard to the capex spend, the consumption boost as well, and this entire religious tourism that could aid the economy in the coming few months. That said, let's discuss a few stocks. SBI Cards, they have come out with their update. And I'm looking at a Morgan Stanley note. They're saying that the spends actually for SBI Cards is up, while for the industry it was down. And also on a month-on-month basis, there is some market share gain. Though on a year-on-year basis, their market share is still down. What's your view on SBI Cards? One of those stocks that didn't participate in that big bull market run that we saw. Your take?
You see, we don't have a formal rating on SBI Cards, but as per our understanding, two things can happen for SBI Cards. One being that if you look at the industry as a whole, while the overall transactions in their credit cards, they are going up. But the spending per transaction, that has been going down, which might be an indication of the slowdown which is there in the economy. So that is one. The second aspect in SBI Cards is that once the interest rate starts softening, then I think there will be some tailwind which will come to this company as well. So to that extent, I think that once the interest rate they start softening and the demand revives, there could be some tailwind which will come to the credit cards industry, and SBI Cards will also gain by virtue of that.
Amnish, hi, morning. The government looks keen to push through divestment for some of the PSU banks, the DPAM, that's the Department for Investment Banking, etc. They have empaneled investment bankers to look into it. And some of the banks where the government holding is close to about 90% is IOB, Central Bank, Punjab and Sindh Bank, UCO Bank. So these become likely candidates for the government to offload their stake. Will the street get excited with this development?
In the current context, when the markets are under pressure, I think the streets might not get excited due to this. Now, there's another reason. If you compare the PSU banks with the private banks, there is one clear differentiator as far as your CET1 is concerned. Because in case of the PSU banks, the CET1 is, you can say, at least 3 to 5% lower than what it is there for most of the leading private sector banks. So they eventually would need money. That is one aspect. The second is that once the bank mergers happened and a lot of these NPAs were taken out of system, at that point of time, most of these banks, the government stakes went up drastically. So now they also need to cut stakes in many of these banks. So the divestment will happen, but I don't think there is anything very exciting going around that, because the PSU banks have also been massively re-rated over the last, say, couple of years in particular. And from here on, the incremental re-rating doesn't look likely for them.
Someone was saying that PSU banks are cheaper, much cheaper than private sector banks still. But maybe the larger trend is still the fact that private sector is gaining market share, right? That's the overall sort of picture, the larger story in that sense. Amnish, good morning. Good to have you with us here. Just a quick word on Federal Bank. I don't know if you heard the conversation with which my colleague Shireen had with KVS Manian. There was an analyst meet as well. They put out some targets in terms of what Mr. Manian wants to do with Federal. Any thoughts?
You see, they are all very longish term targets, something like you can say to be among the top 5-7 banks over the next few years. You see, there I would say they are quite well placed. But then to achieve those targets, it will require massive amount of execution. And execution is where federal banks are lacking, you can say, in its earlier avatar. So I think at present, I think it seems to be reasonably well placed. That is one. The second is that if you look at, say, the overall scenario, the main aspect to be looked into it will be the execution. If they're able to execute well, then I think there could be, you can say, a lot of ground which this bank can over a period of time.
Ish, any thoughts on the space? Anything you like within staples?
You see, as the inflation, particularly on the food side, it has started softening, I think eventually the demand for FMCG products is going to improve and the volume growth will come back. But having said that, if you look at many of the larger players on the FMCG side, it is not only the current pressure in demand from the past say, a few months, which has been impacting. But there are structural issues with several companies with regards to competition, with regards to their product mix and various other aspects. So there will be an uptick in demand, but structural things, they are not going to change. So in the staple space in particular, we currently are liking one is Britannia, where I think that they are much better placed than most of the other players as far as your competitive intensity and other your business modes are concerned. And I think at the current valuation and the price of around 400, I think ITC also looks interesting unless and until there's a big hammer in terms of, say, duties and taxes, which comes from the government side.
Amnish, the other story that we've picked up, and this is a CNBC-TV18 exclusive, is that the Indian government is now considering a review of the import duties on alcoholic beverages, particularly Scotch whisky, which comes from UK, basically giving the same kind of concessions that you are giving bourbon whiskies coming from United States. So it could be positive for United Spirits if it comes through. If this plays out, how big a positive would it be? Would you look at United Spirits in particular?
It's very difficult to quantify, but having said that, your imported branded whiskies, or you can say the products which come under the bottle in origin kind of a stuff, so they have been attracting much higher duties. Now, if you look at United Spirits in particular, so they have been gradually increasing the proportion of the sales, and they have cut back on the tail significantly over the years. Now, the consumer class which uses these products, they are all, I would say, upper middle class, or you can say the premium end of the consumption. But if the prices of these come down, I think there could be a significant boost to both sales as well as profitability of many of these companies which are importing these products. And I think United Spirits, because they are now handling the entire global Diageo portfolio, whichever brands are being sold in India. So I think definitely this company is going to benefit out of it.
Okay, all right. Amnish, I wanted your view on some of these metal-related companies as well. Getting into the weekend, I got a lot of calls telling me that, Nigel, that duty is coming, and it didn't come. So yesterday you saw a knee-jerk reaction. A lot of these stocks did see some selling. But the industry believes there's a very, very strong case that we see some kind of protection from the government of India because of the way China has been dumping steel all across the globe. And now if the US puts additional tariffs, that could lead to further dumping as well. So in that case, it could make the domestic steel companies' plea rather stronger. Your view on the ferrous names first?
The news which you talked about, or you can say the rumor that has been doing the round in the media from quite some time, that eventually the duties are going to come. And yes, exactly, with the US now increasing the duties on you can say Chinese steel and other metals, I think the flow to other markets will increase. But this is also a reality. If you look at US, their maximum imports comes from not China, but some of the countries like Canada and Mexico, and China directly accounts for only 6%. And what happened last time around was that once you increase the duties on China, the Chinese goods are actually flooding the US markets by getting it rerouted from the countries where there was some concession. So I believe that it is not only I would say the US markets which will be at play, it will be you can say the overall pressure which is there. But yes, there are hopes that the safeguard duty is going to come in case of steel, and not only steel, I think many more commodities will qualify for that. But usually it is very difficult to take a call that whether it is going to come, when it is going to come, and what proportion it is going to come. But looking at the past history where they had imposed the duties on steel earlier also, one can have a fair expectations. But the timing for that is very difficult to watch.
One more stock you should watch today is Bharti Airtel. The stock closed about 2.3%, and there are reports which suggest that the Tatas and the Bharti Group are finalizing a merger between their D2H business, direct-to-home business. So basically, Airtel Digital TV and Tata Sky, which has now been rebranded as Tata Play. So that's another stock. This is what reports are suggesting. CNBC-TV18 has not independently picked up the news or verified it, but that's a stock you should keep your eye out on. Amnish, lots of news flow surrounding Bharti. First, promoters selling stake in the Indian arm Airtel Africa, then Bharti Airtel increasing their stake in Airtel Africa, and then this news about D2H. And D2H has been struggling because of the way streaming has picked up across OTT platforms. Where do you stand on Bharti Airtel?
D2H is not a very, very big part of the overall valuations or the SOTP of Bharti when you do. Now, if you look at D2H as an industry, I think it has already peaked out both in India as well as globally. And as the, you can say, usage of data improves and as the streaming services pick up, there is no, I would say, big growth driver which is left for the D2H industry. And consequently, I think players usually merge down because Bharti is also, I think, gradually moving more and more into the streaming, more like what Jio has done. So I think that eventually seems to be the way forward. But Bharti is more a play on the data, more a play on the overall telecom. And I won't say that this D2H merger is going to make any big change to the fortunes of Bharti. But structurally, I think it seems well placed. The next few quarter numbers are going to be really good for Bharti because the carryover impact of the last year's price increase that will continue for some time. And I think as we go along, I think telecom it's more like a consolidated market, and I think Bharti seems to be even very well placed even now. I think it will continue to give you secular returns from here on also.
Sure. Yesterday we had NTPC Green. Because of that lock-in period expire, the stock actually was down. I recall the stock, the IPO was at around 108, if I remember correctly. It went dancing away to around 150, and yesterday it closed sub 100. That's a big correction from the recent peak. What's your view on this name or the entire theme, the renewable energy theme? Do you like something out there?
You see, the renewable theme is here to stay. Now, NTPC Green in particular, I think they have big expansion plans going forward. And I think technically now the stock has come below where the IPO levels were. In terms of numbers, I think as of now, there is nothing which is very meaningful from NTPC Green, and it is only over the next few years that the numbers will start improving for NTPC Green. Renewables is a good space, particularly as of now. If you look, the action has been more on, you can say, the companies which make solar modules, which do some kind of an EPC work. But eventually, on the generation side, we have got JSW is there, then Adani Green is there, NTPC Green is there, and NTPC in terms of capacity is smallest among all the three. So I think if this, you can say, the pressure of selling takes the stock down to more lower levels because of the kind of pressure which is there in the markets, then I think the overall renewable space in the long term looks interesting, and NTPC Green actually will also be quite an interesting stock to watch out for.
No, I mean, a huge amount of capacity addition has to come on board. There is absolutely no doubt about that. I think 500 gigawatts by 2030. Renewable capacity, we are at about 200 odd. So there's a lot more capacity addition, a lot more funding, etc., which needs to happen in that particular space. Amnish, in the IT services space, anything coming up on your radar?
The IT services, if you look at, say, last year or so, it has been more like, you can say, the hopes have been there that the things will turn around. Eventually, the growth rates will pick up. But we need to look at two aspects. Now, in the near term, there could be some gains because of rupee depreciation. That is one. Secondly, Europe still continues to be under pressure, but India is more like, I would say, US-centric. But even in US, I think if eventually the duties which the Trump administration, they plan to impose, it plays out, and the overall there's some pressure which builds up on the demand side and all, then I think the expected recovery in many of the IT stocks, it might not happen the way people are expecting. So in IT, I would say would be very selective, not many names to choose as far as, I basically won't go aggressive in buying the IT stock even at this point of time.
All right, Amnish, we'll leave it there. Thank you very much for staying on and answering all those questions. Appreciate it very much. JP